Hello, and welcome to Quaint Talk Show, where we decode finance and unravel the world economy in just a few minutes. I'm Kiran, and with me Vijay. We guide through the intricate world of money and financial matters. We recently concluded the COP28 in Dubai, where our global leaders have pledged resources for climate change and sustainable development. What do you think, from your perspective, the role of finance in sustainable development? Can you share your thoughts?
Sure, Kiran, and thank you for having me. So, with regard to the sustainable development, if you use the word sustainable development, the word sustainable development has stemmed from the Sustainable Development Goals of the United Nations. All the world leaders, all the member countries of the United Nations have come together, had framed around 18 different goals that they wish to achieve by 2030. So while there are many goals in the United Nations that are meant to be achieved in the long run, while some in 2040, some in 2050, and some in 2100, but the Sustainable Development Goals are most urgent and pressing development goals that the world needs to resolve by 2030. In this regard, out of the 18 different types of sustainable development goals that have been placed by the United Nations, some of them require financing. They cannot be achieved without financing. Now, whether the financing is done by the local governments or by the developed countries in aid to the underdeveloping and developing countries, that's a different matter. But the fact of the matter is that some finance is necessary for to achieve these goals. So, therefore, these activities which require finance are called as development goals or sustainable finance. That means some sustainable development goals require financing. Those which require financing, we say that it is sustainable finance because they are in or for the benefit of the sustainable development goals. Now, climate change is a part of the sustainable development. Though we have the COP events that occur almost every year, but a COP itself or the climate change, which primarily deals with the climate change, that is also a part of the Sustainable Development Goals. So, therefore, in the COP28 Dubai summit, both climate change, though climate change was the major thing that was discussed, sustainable development was also part of it, and climate change itself is a part of the sustainable development. Now, to answer a question regarding what the global leaders have pledged, quite significant amounts have been pledged in the COP28. It's a different story whether these will really will be implemented or not, because the past experience is that similar such kind of a commitments have been done in COP26, COP24, COP20, and even the prior different COPs. Not many have been adopted or not many have been implemented. And even within those which have been implemented, there are significant gaps. Now, we are not, bothered so much about
Mm,
what has not been implemented. But the crux of the matter is this time in the COP, sufficient and significant amounts have been committed by the developed world and also by the financial institutions. For
Does this mean that we need to sacrifice the returns for financial institutions?
not necessarily, because the sustainable development is classified into two different types. There is a positive sustainable
Mhm.
development, there is a negative sustainable development. Now, negative sustainable development is, for example, don't finance something which is bad. Take, for example, tobacco companies or oil. Cut down on financing. So they are not really financing any climate resources. All that, yeah.
Mm,
So that is called negative sustainable development. So it is possible that financial institutions could cut back on their funding to these kind of a climate, I mean,
mm,
activities or companies that are emitting a lot of carbon dioxide. But the money necessary is not going to those activities where climate change is climate change is one of the most important one, in the sense that the money need not go into green energy. The money can go to any other traditional energy, need not be, but even then we consider
mm.
it as sustainable finance. So it is not a sacrifice of the returns. So if as a financial institutions, I could be cutting short money from, let's say, coal or deforestation and that kind of activities, but I will put that money into some
Into
other
green
activity.
energy. Mm.
May not be green energy, could be some other traditional where the energy requirement or where the carbon emission is quite less, but not definitely
No,
something which is positive or giving some positive benefit to the climate change activities. So that's why
understood.
it is not necessary that banks and financial institutions are sacrificing the returns. In fact, in both the case of negative and sustainable finance, they would be roughly getting around 15 to 16% of the returns. They can expect any of these kind of funds to give around 15 to 16. There are many funds which are climate focused, and they have both hedge funds and mutual funds which have generated close to around 12 to 18% returns in that range. And many of the loans that have been given to by the financial institutions, these companies, they also have been able to generate close to 10 to 12% return. So I do not think that doing
Mm.
sustainable finance means cutting corners or cutting your bottom line. That is not necessarily true. Banks have been continuously able to do it and also make a profit. And there is one more. In some countries, particularly in the US, if you give a loan to a sustainable finance activity, you get a tax rebate. Now, if you look into the
Mm.
balance sheet of any large bank, or for that matter, any small bank, doesn't matter. If a financial institution is involved in giving a loan to any company which is, aiding in the climate activities or reducing the carbon footprint, then you can get a rebate. Many banks have got rebate. Most banks have got rebate in billions of dollars. I know banks which have got rebates of around $3 billion a year. For example, they would have to pay, let's say, a tax about $9 billion, but because they have been
Mm.
funding climate related activities and companies, they got a rebate of $3 billion. Thereby, their annual tax, payment is only $6 billion. So apart
Yeah,
from the
that's a
actual rebate, they
significant
are
amount.
also getting
Yeah.
a return from the government in terms of tax subsidies.
Mm. Understood. Is there any key driver for this sustainable finance?
Can you repeat that
Is
question?
there any key driver for the sustainable finance?
The key driver would be the government. Financial institutions on their own would not be can only do limited amount of contribution to getting the carbon footprint. It is the government initiatives that is going to drive. Take for example the cars. Okay, unless the governments come up with a plan to cut down on emissions or to promote EVs, electric vehicles,
Mm. Yeah.
banks would have no problem, giving loans to any of the car companies that are run on petroleum or diesel as a fuel.
Mm.
So, because after all, the bank is a private entity that has to take care of its returns and also is answerable to the shareholders.
Yeah.
A bank will be willing to fund or not fund based upon whatever is the bottom line priorities that they have got. They
Mm.
can bring about a change, but that would be limited if they have to act on their own. But if the government creates policies, take for example, they ban altogether, polluting vehicles, or
Mm.
there could be a total ban on any, you know, uh, engines that work
Yeah.
on the traditional fuels. If
Mm.
government brings that, then the banks would be forced to give loans to the new age companies, particularly electric vehicle, green hydrogen, and other kind of a
Mm.
renewable energy fuels,
Yes.
and that is going
Mm.
to make a much more contribution to the climate change as well. So the key is government policy. To answer a question, it is the government that holds the key. Are they willing to do it? And it is not an easy job, because from a government perspective, it is not just about passing a policy. Their
Mm.
policy will there could be a country which is totally dependent upon a traditional car company that runs on traditional fuel. If you
Mm.
create those policies, The country may not be in a phase to suddenly transition from that to an electric vehicle. So that could mean unemployment. That could mean a hit on the GDP, economic activity. So these are hard decisions that individual governments will have to look into. So the COP28 only
Hmm.
provides a forum, but finally it is for the individual governments to take the decision, and they will take the decision
Hmm.
based upon their specific economies.
Understood.
To answer your question, the key is the government policies.
Understood. Thanks a lot, Vijay, for sharing your views. That ends our talk show today. Until next time, we come up with another different question to you. Thanks a lot for joining. Have a nice day.
Thank you, Kiran. Thank you.